Welcome to the Ellsworth Advisors monthly update for August 2025. I'm Kelly Keenan. This is Cameron Mealy, and today we'll review the latest economic data, how the markets did, and then also how our portfolios performed for the month and year to date. Cameron, why don't you kick us off?
Will do. Good morning, everybody. Hope everybody's well. Just for frame of reference, today is Tuesday, September 2nd. Biggest economic news really that we've had in the month was the Jackson Hole meeting. This is the Fed's annual economic symposium hosted in Jackson Hole. On August 27th, at his speech, his headlining speech, Fed Chairman Jerome Powell intimated for the first time that the Fed is now starting to move towards a bias towards a rate reduction. Basically, Jerome Powell's message was that the economy is strong. There are some cracks. He does believe that inflation is more under control. There's also belief now within the Fed governors that tariffs are not adding overly to inflation pressure. So this is kind of, for those who've been waiting for a cut, this is a breath of fresh air. It looks like we will get a cut. I'd have to say probably 25 basis points. The Fed will meet. Their next meeting is September 16th and 17th. So look for September 17th around 2:30, 3 o'clock for there to be an announcement that the Fed has cut 25 basis points. The current rate, target rate is 425 to 450. So that'll bring that down to 4 to 425. Again, U.S. rates are still pretty high compared to the rest of the world. So I wouldn't be surprised if we saw a 25 basis point cut in September and a 25 basis point cut in December, which would basically give us a 50 basis point cut in 2024 and 50 basis point cut in 2025. After that, it's going to be really a story of the numbers.
Yeah, I mean, that should get the first cut will get it right around 4%, let's call it. Mm-hmm. Another one gets us below 4. How much further?
That's probably a good long-term number.
You know, the comments on the inflation, not so much that it's come down much more. It's kind of stabilized, if anything.
It's manageable.
I think stable is, kind of the new lower is kind of what's going on now. And we'll jump into inflation, but then the other big talk, he mentioned the
employment,
Jackson Hole.
Okay.
Well, the big talk there was employment. So that's where the disconnect between inflation and employment are happening.
Yep. So we will jump ahead. The August employment report will come out September 5th. According to Bloomberg, economists they polled are looking for 75,000 jobs to be added in August. That would mark the fourth straight month where we've seen under 100,000 jobs added. So clearly the employment situation does appear to be the most challenging aspect of the economy. Now, with that being said, if we have 75,000 new jobs added, the employment rate will increase from 4.2% to 4.3%. Again, both those numbers, very much historical lows. Even the Fed funds target rate is still very low compared to the historical norm.
5's kind of the concern number, so we're still a decent ways away from.
Now, that being said, we haven't seen kind of traditional historical numbers they've ticked up, but almost in 20 years. I mean, we've been in a zero low interest rate environment really since the tech wreck of 2000.
Correct. And there's also theory out there, the lack of immigration could be meaning fewer new jobs.
Yep.
You have a lot of immigration in, a lot of low wage jobs being created. If that pool is dried up, how is that skewing the numbers also? Because when they say new jobs, they're not saying what level of income or what level the jobs are at. So once again, a lot of caveats to all the data we're getting. Not that that hasn't always been that way, but I think it's been highlighted more so recently.
But with the true crackdown on illegal immigration, with the tariffs, we are kind of in a strange new world where the economic norms that we're used to are not there. President Trump is kind of rewriting the playbook. His fans are going to say he's doing all the right things. His detractors are going to say he's doing all the wrong things. We'll have to see how it plays out. But certainly he is adjusting the economy as we know it. And with the aggressive changes that are being made, I mean, we're talking about a generational change kind of in the U.S. economic landscape. So
tariffs are going to get interesting, too, now that they may be illegal. So there could be some more changes there.
Well,
there we go.
Wait till it gets to the Supreme Court. They won't be illegal. I'm pretty confident of that. Charging companies that charge you the same thing is not illegal in my book. Let's go to the numbers real quick. GDP on August 28th, the Bureau of Economic Analysis reported that according to their second estimate, GDP in the second quarter increased at an annualized rate of 3.3%. This is an increase from the 3% reported in July as the advanced estimate. And of course, this compares to a 0.5% decline in the first quarter. So GDP looking very healthy. The Atlanta Fed's GDP now forecast another big number. This is their forecast as of August 29th. They're looking for an annualized rate of 3.5% increase for the third quarter.
That's healthy.
That is very healthy. So we'll see. I mean, that number does, as information comes in weekly, daily, that number does move. So we'll see. But, right now it's looking like third quarter GDP could be very strong. Let's talk about some of the inflation numbers. Personal Consumption Expenditure Index. Again, we always say this is the Fed's leading gauge of inflation. On August 29th, the Bureau of Economic Analysis reported that the Personal Consumption Expenditure Index increased 0.2% in the month of July. For the 12 months ending July, the index was up 2.6%. Over the past year, we've seen the increase as high as 2.8% in January of 2025 and as low as 2.2% in April. So it does feel like we're a little bit range-bound, which is good, is okay. Producer Price Index. On August 14th, the Bureau of Labor Statistics reported the Producer Price Index increased 0.9% in July. The index was unchanged in June. And over the year, the index is up 3.3%, which is the largest year-over-year increase since the 3.4% increase in February of 2025.
Yeah, that's where.
And that was a newsworthy number because it was a big number when it came out.
It looked like the consumer was slowing down, and
all of a sudden,
now it's like, things may got a little hot in July. So
let's turn to the Consumer Price Index. On August 12th, Bureau of Labor Statistics also reported that the Consumer Price Index increased 0.2% in July. This was a slightly better than the 0.3% increase in June. And on a year-over-year basis, the index in July was up 2.7%. So again, inflation is kind of at that 2.5 to 3%. Not quite where we advertise the Fed wants it, but the three handles seem to have gone away, at least for now.
And so seasonally, inflation tends to be a little hotter in the summer. So, no pun intended. But the reality is okay, I can see them going maybe sub 2.5 for the rest of the year.
Absolutely.
But stable is kind of the key there.
Yep. So the economy appears strong. Employment does appear to be weakening. Again, the immigration situation could be a big draw on that. So we don't really know what that means. And again, this is, that's a Bloomberg forecast, 75,000 jobs. We'll see what actually comes out on Friday. But by and large, I think we're going to see a rate cut. I think the economy, appears to be in pretty good shape. And, all that should lead to, hopefully, some good returns for the market over the back half of the year.
Well, we'll talk about that right now. August definitely showed us good returns. Maybe a little shifting in what was working. Obviously, we've had a good tech rally in July. And for August, the hits kept coming. S&P for the month was up 3.56%. The Dow Jones was up 4.49. The NASDAQ up 3.9. So a little bit of shift in leadership there. I mean, the Dow Jones definitely caught up and overtook the two of those and had a little stronger month. The Russell 2000 small cap stocks for the month up 9.21%. So pretty big month for small caps. International markets, the EAFE up 4.42%. Emerging markets up 3.3%. And then the Bloomberg Aggregate Bond Index up 0.38. So good month in August. Year to date, that takes the S&P 500 to 9.84% for the year. The Dow Jones 7.05%. So obviously that's been lagging. The NASDAQ up 11.11%. Russell 2000, even though we had a giant month, up 9.2% for August. Year to date up 6.11%. International markets, the EAFE, for the year up 20.33%. So, earlier in the year, kind of driven by the weak dollar, and we saw the dollar kind of stabilize. We're starting to lose a little bit of ground on the dollar. We're seeing the international markets pick up a little bit. Emerging markets up 17.77%. And then year to date, the aggregate bond index up 4.99%. So that's pretty, so far so good for longer term bonds. Our portfolios, our growth with income portfolio, decent month there. In August, we were up 3%. Year to date, we're up about 12%. This is our balanced portfolio. Big gainers in August. Lennar, the home builder, we're up 18.7% for the month. Apple up 12%. Apple's been a laggard. Lennar's been a laggard. Toyota Motors up 9%. J&J up 8%. Laggards, Digital Realty Trust down 5%. Microchip Technologies down 4%. Year to date, big gainers in the portfolio. Raytheon up 37%. Our gold position up 31%. NVIDIA up 30%. Nucor up 27%. Laggards for the year, Apple down 7%. Digital Realty down 5%. Honeywell down 3%. Dividend yield portfolio. Good month here. Really defensive, high dividend paying stocks have been out of favor.
Certainly not headline grabbers.
Definitely not. So,
but just steady, strong, good companies.
Yes, August up 5%. So we made up a lot of ground there. We've been kind of hanging, just below break even for the year in dividend yield. Year to date, now we're up 3%. So good movement there, and that's kind of a sign of the broadening where you see the Dow actually outperforming. Gives definitely some stability in the portfolio. Big gainers in August. Packaging Corp up 12.5%. Old Republic up 10.5%. PNC Bank up 9%. Bristol Myers up 9%. Laggards, Amgen down 2%. American Electric Power down 2%. Year to date, Altria, a big gainer in there, up 29%. AT&T up 29%. J&J up 22%. AEP up 20%. Laggards year to date, Bristol Myers down 17%. Avalon Bay down 11%. We're actually getting out of that soon. And then Packaging Corp down 3%. Our appreciation with income portfolio, year to date up 3%. August up 3%. Year to date, we're up 13%. Big gainers in there. CVS up 18% for the month. Freeport McMoran, copper producer, up 10%. Synovus up 9.3%. Laggards in August, Microsoft down 5%. Sunoco down 5%. Meta down 4.5%. Kinder Morgan down 4%. So you kind of see there some of the tech stuff came back in August, came down in August. Year to date, though, CVS up 63%. Amphenol up 57%. Lam Research up 39%. Broadcom up 28%. Big laggers for the year. Energy Transfer Partners down 10%. Eli Lilly down 5%. Zoetis down 4%. Price potential portfolio. Decent month in August, up 2%. Year to date, we're up 19%. Big gainers. Gold holding Anglo Gold up 23%. Aptiv, we just kind of threw that in the portfolio. Pretty short term, that's up 16%. Google up 11%. Expedia up 19%, which once again we kind of bought during the month. August laggards, Dell down 8%. AMD down 7.8%. Meta down 8.5%. Once again, Microsoft down 5%. Year to date, a big gainer in the portfolio. Celestica up 111%. Mercado Libre up 45%. AMD up 35%. Goldman up 30%. Really, the big laggard in the portfolio are still holding on to. Harmonic down 27% for the year. Long-term price growth. August up 4.5%. Year to date up 15%. Big gainers in August. Trinity up 22%. Newmont Mining up 20%. First Solar up 12%. Laggards for the month. Amcor down 7.7%. Microsoft down 5%. Meta down 4.5%. Year-to-date gainers. Newmont once again leading the pack up 100%. Royal Gold up 36%. Netflix up 39%. Nvidia up 30%. Laggards. Merck down 15%. Apple down 7%. Once again. Small caps. Kind of like dividend yield. Definitely been lagging. Kind of your more aggressive small company stocks have outperformed your more what I call quality small caps, which we're a little more focused towards. But for the month, our small cap portfolio up 8.5%. Year to date, we're still negative, down 4%. Big gainers, Idaho Resource up 72%, Paymetis up 40%, Bluebird up 30%, Build-A-Bear up 20% for the month, and Farmer Mac up 21%. Farmer Mac we're already out of. Laggers during the month, Innovative Solutions and Support down 17, Universal Technical Institute down 17.5, Assure Software down 12%. Year-to-date, big gainers still in the portfolio. Easy Corp up 36%. Innovative Solutions and Support up 52% year-to-date. Ligand Pharma up 15%. Pro Assurance up 50%. Big laggers still sitting on. EIG Employers Group down 16%. Skyward Insurance down 4%. So it was a good month. Moving forward, expectation-wise, a little bit of weakness today. First day of the month. We've kind of seen this before. Parts of the market are definitely extended. I think big picture into the end of the year, definitely more room to the upside. The economy's not in too bad a shape, so we got some wind at our backs. But as always, we're definitely due for some chop in the market. September typically is when it comes. So, it's not going to faze me if we have, 3 to 5% pullback in the upcoming weeks. Then again,
All heading,
we've kind of set up this way other months and nothing's really happened. So,
but all really heading into, I think we're going to see chop. We're going to hear a lot of noise, but it's really all going to come down to what happens on the 16th and 17th with the Fed.
exactly.
I think if the Fed does cut, that gives people the confidence or maybe the license to start putting money back in equities. We could see a rally into that. But of course, we have seen 25 basis point cut, and all of a sudden the market expected 50.
Right.
And we don't see it.
No, I think
so.
It's given that the market's probably already priced in 25. If it was something different than that, that would be a surprise.
And the commentary is going to be important.
Exactly.
What does Powell actually say? What do the Fed governors feel? But I do think we could have a strong finish of the year. The economy certainly seems to be strong. We are going to have the headline risks, and obviously everybody has their eye on the artificial intelligence stocks. They have come back to earth just a little bit. There's been a lot of headlines. Have the valuations gotten too high? Is AI going to be, we know it's going to be game-changing, but it's going to be game-changing. Who's going to pick the winners, and when is it going to be game-changing? So those companies are, they're valued for perfection right now.
Right.
And it's hard to meet the street's expectations when you're valued for perfection.
It's going to be a interesting month. Like I said, expect some chop, but, going to the end of the year, I like what the setup, and really, I like where we're positioned. I think we're in the right places.
Absolutely. So as always, thank you for the trust you've placed in us at Ellsworth Advisors. If you have any questions, please feel free to reach out to us. Have a great month. Welcome to fall, and we'll be talking to you again next month. Thank you.